Hello, everybody. Chris Martinson here, and today we're going to be talking about finance and economics as part of Finance U. Remember, anything that you see in this video and all resources available at our websites or affiliated websites are not intended as or construed as financial advice. This is for educational purposes. Remember, if you have a financial decision, please consult a financial professional. We are not attorneys, we're not CPAs, we are not financial managers. As well, we do our best to be accurate, and everything we represent is as accurate as we know it to be. Now, let's turn to our program.
We've missed innovation, as you stated. We've missed better service because Charlie Munger, Warren Buffett's partner, I believe it was him that made the quote, "Show me the incentive and I'll show you the outcome."
My favorite quote.
So when you tell, okay, these companies are too big to fail. Well, guess what? If I'm a medium-sized company, Chris, I've got to become too big to fail in a hurry because now I can get away with things.
Well, hello, everyone. Welcome to this Finance University. Peak Financial Investing is the host of this. I'm Chris Martinson, your host of this particular thing, with Paul Kiker of Kiker Wealth Management. Paul, good to see you again.
Good to see you again as well, Chris.
Well, it's we had a second part of this that we did for our subscribers at Peak Prosperity last time. We talked about excavators, and I'm talking the things that move earth. Really popular. People really wanted to hear us talking about excavators, so that's good to see.
That was fun. I enjoyed that conversation.
Yeah, I did too. And I'm busy looking at that. But today we're going to be talking about all things financial. And so what's on your mind? I got a lot of things on my plate. I hardly know where to start at this point in time. So where would you like to start today?
I'm about the same. It's like there's been so much data that's come out over the past week. It's like I'm sitting here going, okay, what is the most appropriate to use? But it's all very important data from, credit card rate balances are stretching out to all-time highs. Delinquencies are running high recessionary levels. Late payments on autos and savings rates are at an all-time low. But yet the markets are absolutely oblivious and continue to run, or at least look like they're wanting to run right now. So it's been hard to really come up with one particular thing to point to because the market's been through a little bit of a tremor. Looks like we found a little bit of a solid base. And, especially with record corporate buybacks being announced coming, record levels right at an annual pace that's all-time high. That's going to probably provide some support under the market and more than likely kind of push us towards all-time highs over the next 3-4 months, which is no guarantee, but it's a high probability.
Yeah.
So, this is a situation where, the recession potentially coming, being delayed with consumers just barring themselves to the hilt, it appears, with credit card balances at highs. And, it's amazing how, I think it was Jeremy Grantham made the comment, how narcissistic the American consumer has become. But, we've got a Fed and a government that's trained them that they'll bail them out. So I kind of want to reference some conversation, and John Husband came out with a great new letter that's worth reading.
He's great.
For those that want to go find it. He's so eloquent at stating the big picture, and his understanding of history is just incredible.
Yeah, he's really amazing. So, well, the official statistics keep telling us that everything should be rosy, but individually, when I'm polling people, it's less rosy, right? A lot of nervousness out there. People are struggling to make ends meet. TikTok is full of young people complaining about how they can't make ends meet, So you have all of that going on, and as you and I have discussed, many of our official statistics now are unbelievable. And I mean that in the full sense of that word, right?
Literally unbelievable.
And so that's the landscape we live in. So you have to make sense of what you've got. So I just know now that I have to discount official statistics pretty heavily. We know by the numbers, as much as we can trust them, that the U.S. government is deficit spending about 6.8% of GDP, which is an emergency wartime level of spending. But COVID broke a lot of things. It broke families. It broke relationships. It also broke fiscal discipline by DC. It just, once that twig got snapped, we couldn't put that back together. Now it's permanent. We're going to be running these massive two and a half, $3 trillion deficits, and that's without a recession.
Yes.
Um, so is that permanent now? Is that just life as we know it?
Well, if it's permanent, it's going to be permanent in the short run, in my opinion, because
Hmm.
mathematically, you just can't continue this forever. They can probably continue it a lot longer than we can anticipate, especially for those who see it and understand where this path is going. But but at some point, something has to break. I mean, even in the housing market, TikTok. Going back to that, my daughter, other kids that are in her area that are doing really, really well, right? Some of us would look back and say, hey, you're doing unbelievably well to be in your early 20s with the opportunity. But, if you have work ethic in today's society, the sky's the limit, really, especially if you're younger, much
Hmm.
less if you've got the discipline to go with it.
Yeah.
But, and I can't remember the statistics specifically, and I tend to round it up, so don't hold me to the exact number, but it's around 70% of the population can't afford the median home price. Well, either house prices have to come down or salaries have to go up, and or a combination of the two. And investors forget one of the things that Grantham pointed out in his recent interview was, the Japanese bubble was unbelievable in the late 1980s, and real estate over there, the prices were through the roof. Now, that bubble broke all historical measures, and it's not outside the realm of possibility that this bubble breaks all historical measures by larger margins. But the problem is a statement that he makes in the title of Hussman's most recent letter is, this is where you start bear markets from. This is not where you start bull markets from.
Hmm.
So this is a dangerous window, and investors have to have a disciplined process, and they have to have an understanding of where they are so that they don't get sucked into this, euphoria and this complacency of just assuming that things are different this time. And that's the challenge. Anything good that we do in our life takes discipline. Those of you that are listening out there that have accumulated resources, you made sacrifices in the past because you were disciplined and you saved and you set aside funds so that you could have those funds today and be in a position to have that money go to work for you. It's no different in the process of where we are now. We have to guard ourselves against letting that greed take over and that temptation to justify that this time is different, and really guard ourselves against confirmation bias, where we justify our actions by seeking out answers that we're looking for that confirm our initial biases already.
Well, speaking of initial biases, I'd love to get to that Hussman letter, but let me just show you something here that really caught me, because I've been squawking about this for a long time, and now I'm not alone by any stretch of the imagination, which is that everything hinges on oil, and the price of oil in the United States has
Yes.
gotten complacent because we got this stuff called shale oil, and oh my goodness, we're the swing producer, Saudi America, it's there forever, hey Hosanna. And this is a piece out by HFI Research, a small research firm out there that looks at the data, and they just go into the data, and here they're looking at U.S. oil production. You can see it's coming up here and all of that. But let me just take you down to their conclusion after they run through all the data, and they say here, at some point over the next 18 months, oil analysts will have to change U.S. shale oil into U.S. shale natural gas liquids oil because the whole market is shifting over. What's coming out of the ground isn't oil as much. It's like gassy. It's got a lot of gas and natural gas liquids. Oil weighting in U.S. shale oil producers is dropping at an alarming rate as the Permian players become gassier and gassier. This is what you see at the end of a play. This is not a surprise to anyone who's tracked some of the best producers in the Permian. Diamondback Energy is a great example, good company, by the way, of this, with oil weighting dropping from 74% in 2017 to 59% in 2023. So 5 years, and they've lost basically 20 points of oil, and they're just getting NGL and natural gas coming out. We're not talking about this yet, but Paul, what this means is that Saudi America, we can just get more. If we ever got in trouble, don't worry, we drained our SPR. Now, oh no, there's a kinetic conflict in the Middle East. Don't worry, we'll just ramp up our shale production. That's over. And this is a huge trend change, and I think people are way too complacent. And I would fault our government and the EIA for being part of that rah-rah, cheerleaders who are more interested in the narrative, like the BLS telling us great things about the employment report, which gets quietly revised down, right? You fudge the employment statistics, nothing bad happens, but when you fudge the oil data or you miss it, bad things can happen. So I want people to be alert to this. This is a big, big deal.
Yes, that is a big deal. And with that taking place, Chris, what would you imagine would happen with the oil price if there was a tanker that was blown up by Iran or someone in the Middle East?
Oh, just double. You just double it
Yeah.
right away. That's my first start.
So so with that information, I would assume that one of our weak points in our American economy, if you were to try to really target us, would be to impact the supply of oil in some manner.
Yes, but you would target the overall edifice of over-indebted countries everywhere,
Hmm.
particularly all the oil importers. So that would be a problem. And what's interesting is how these dynamics sort of play out. I was interviewing Luke Groman, and he gave me a dynamic I hadn't thought of, which was really important. He said, you know, when oil goes above a certain price, interest rates start to take it in the shorts, right? They start climbing in the US. And the reason for that is that all these little countries who have to import oil, when the price of oil goes up, they need more dollars. Well, that means they usually have to sell their treasuries so they can afford the oil they need, right? So that makes, because you're selling the treasuries, that makes the yield go up because it's a seesaw, right? So you sell them and the yields go up. So I hadn't thought about that. And so you could also expect that if a tanker got blown up in the Middle East and oil prices doubled, that interest rates would begin to spike in the United States because of all those treasuries being sold. What a world.
So we've gotten ourselves in a position where inflation's already sticky, is already wearing on the average American. And if oil is constrained, then that could potentially create demands for dollars, which causes interest rates to go up, which are already, we're spending a ridiculous amount on interest, all because we've been foolish enough to get ourselves in this much debt without focusing on the long-term ramifications and that much lack of investment into the correct way to deal with this from a long-term standpoint.
Yeah, let's see if I can find this here real quick because I mean I don't know if people have seen this, but it's pretty dramatic. Um, Not that. Is that the right? No, that's the wrong one. Keep talking. I'm just gonna look something up here real quick.
Okay. Yeah, I was thinking that there's five things that I was wish that I had pulled up that I can access real quickly here to reference. That's from that point of view, we're in an extremely weak position economically economically to an external shock of that nature, either accidental or contrived.
Hmm.
And so while you're going into that, well,
Here we
we
go.
can stop. You find it?
Yeah, I got it. This is a little old, but it's directionally correct, which is this idea here, which is we're looking here at a chart across many years. It starts in 1990 and comes through to about current, and this is how much oil is in storage. This is in millions of barrels, and so you could see here that it started getting sold off. People said, "Oh, Biden started selling it off about here," but actually, it predates. The United States started selling oil back here, but this is under Biden. And they
Mm-hmm.
said, "Oh, what we're going to do? We're gonna refill that strategic petroleum reserve whenever we need to." But they haven't been able to do that. They keep trying, but they don't get the right bids. They said they wanted to refill it at 72 a barrel, and it hasn't been there in quite a while. But look at this. You draw a visual line across. You have to go back to about 1990 when we had about half as many cars on the road to have the same amount of oil in the strategic petroleum reserve. And so I mean, it's not strategic because it got used to bring the price of gasoline down for political purposes. That's not very strategic. I'd call that crass. But at any rate, I was talking with some engineers who were on the thing, and it's not like we have a big hole in the ground. Well, we do, but it's a salt cavern. We had these salt caverns that we filled up with oil, and they said when you drain them down too far, salt, guess what, starts falling in, and there's all these issues. And they've been screaming on the engineering side for a while that like, hey, we're actually might be damaging our strategic petroleum reserve as well as draining it. And again, that just speaks to sort of the narcissistic short term. If Grantham thinks consumers are narcissistic, love to hear what he thinks about politicians.
Yeah. Yeah. So it's just amazing. And of course, Husband goes in, and that just kind of brings me to this point here, which I'll share a little bit from that, unless there's something else that you want to
No,
carry
let's do this.
on.
I love
Um,
Hussman.
I do too. You know, one of the things that I really like about Husband is I followed him for quite some time, and he was so eloquent and so timely at the 2000 peak, warning people. He had them prepared. But he's been so honest about that, how they've had to adapt their approach to, going forward. So, he goes on, and basically what he quotes is Jeremy Grantham here on the Insightful Investor, March 19th, 2024. And, without going through, everything, he just goes and says, today is the top, I'll highlight that here as I read it. Today is the top percent in the Shiller PE of all time. And when you start from this level, you have a very hard time going up materially. You've done it once or twice, but you've only done it for a while. In the last gasp of 1929, in the last gasp of 1999, and notably and most impressively in Japan, where maybe for 2.5 years you kept going, and in each case, they ended incredibly badly. So the price you paid for bucking that kind of law was a very high price. And, but he goes on to explain just the emotions that are behind. And then Husband goes on to point out in here, his non-functional market capitalization, corporate gross value added, including estimate. Anyway, this is his analyst. And Jeremy Grantham stated on the podcast that he felt like this was the most useful tool out there that Husband generated to gauge the market valuation. So here we are, this is the third highest in history, and only the fourth goes back to the year 2000. You had the 2020 peak, and you've got this last gasp of where the market is running, and it just goes on to illustrate just how dangerous this period of time is and how investors tend to justify themselves throughout history. And I thought this was very eloquent on what, as Husband speaks, investors seem to hear 1929 and immediately dismiss the speaker because they associate that extreme with a subsequent depression and an 89% market collapse. But remember that an 89% market collapse is actually two back-to-back two-thirds losses. And after the 1929 peak, the first two-thirds of the loss simply took the market to historically run-of-the-mill valuation norms. And that's pretty interesting because, you're talking about a substantial decline just to get back to historical norms. And Grantham goes on to talk about so eloquently, which we all know, but he talks about how he's worked his way out into the big picture as his career has gone along, and he's kind of recreated himself several times over, which is pretty fascinating. But, he says from the top, this is not where bull markets start. Bull markets start going back to like gold. We've talked about gold breaking out. There's a lot of pessimism. There's a lot of cautiousness. There's a lot of, well, gold's too high now. I can't tell you how many conversations I've had with people that are asking about it, that are saying, this isn't necessarily the peak community. But I had a couple stop in yesterday. They had some extra money that come in. They're like, what about gold? Because they bought some quite some time ago. And when they look at the ounce, $2,400 for a Canadian maple leaf, they're like, oh, I don't know if I want to buy that. So I had this conversation that skepticism is where bull markets start. Well, bear markets start like Husband goes on to state in this type of environment, right? Bull markets are going to start when all the news is bad, unemployment's high. That's where you have the greatest valuation. And no matter how we justify it, no matter how much longer this lasts, this is a very dangerous environment. And for the investor who doesn't have some rules in place and the ability to adapt or the willingness to be disciplined and sit back and say, hey, I'm going to be cautious, there's no historical precedent where there was not substantial amounts of pain involved for those individuals. And the worst environment we could get in as an investor, similar to 1973, you're approaching retirement, you go into retirement, inflation takes off like it did from 73 up to 82, and then you have 50% bear market decline like you did in 1973. So, this is a very dangerous environment. And there's so many out there that are going to say, hey, inflation is going to be good for the markets, and it's going to be good for real estate. It's going to be good for everything. That is not that's not necessarily the case. That's not the case when you go back and look at inflationary events in history. Even housing tends to come down. It's only those extreme hyperinflationary events where those real assets end up, being the thing that you need to own on the other side. I'm not saying that you don't need to own them. I'm just putting it into perspective.
Well, we just need more patience, right? So if you held on from the peak of 1929, you didn't get back to even in nominal terms till 1954. So that's 29 to 39 to 49 to 54. So that's 25 years. But Japan, all excited, they just exceeded their 1989 top, right? Which was at 39,000. So everybody's all excited by that. Yay, they're back. Japan is back. 1989 to 1999 to 2009 to 2019 to today. Well, that's 35 years. So if you've got 25 to 35 years, don't worry about it, except that's in nominal terms, right? So $1 in 1989 is obviously a very different thing from $1 today, right? You just have to understand, like, it can take forever to get back to just even break even.
That's right. So, and I'm sharing on the screen here, if you can see that, Chris, the Nikkei index.
Yeah, look at that.
Yeah, I mean, that was 377% increase. Can you imagine how hard it was for those investors that were skeptical and got sucked in at the end? Because I'll tell you what happened. And I just know it because this is what happens through history. Market cracks. Well, I'm a long-term investor. Market cracks down. Oh, guess what? It hits this longer-term support. Well, I'm going to buy. I missed this last run. I've been waiting. This is my chance to get in. Then it runs down all the way to here. And people, are becoming despondent at this point. Well, I hope takes over. And quite frankly, Chris, I know you know this, but I want to state it again for those that are listening out there. Hope is not an investment strategy. Hope is, you can work hard, do everything that you need to do, and hope that things work out, right? Hope is good. Hope will give you a positive outlook through dark times, but hope is not an investment strategy. So then you get a bounce. Okay, can you imagine the euphoria that took place on that bounce right there? These people think, oh, this is just a little dip like what occurred in 1986. And then boom, it continues to go down. And here we are 34 years later. I mean, that's just absolutely devastating. And it's not outside the realm of possibility that something like that occurs within the United States, because there's obviously deglobalization taking place. And if we lose our position as the global reserve currency, then, by foolishness, and who knows how long it's going to take for that to take place, there's many argue that that'll never take place.
Well, Paul, this time is different. This time is different because, as you can see off of this chart I've just put up here, these are all the other sectors down here. This is technology on the top. Cumulative sector, global sector fund flow since May of 2023, so more than a year ago, or full year. So over the past year, everything's flowed into technology, and look at all these other ones. They're actually they're down. They're down. Energy sort of like cranking out at the bottom of that whole thing. Like, nobody wants energy. Who needs energy? We got technology. This time is different. 4 most dangerous words in investing, but that's pretty stunning to me, just how profound that is. And I don't know if people have already thought this all the way through. It's like, oh, but Chris, you don't understand. It's a new future. We got this chat GPT thing, AI. It's going to make things a lot more effective. I don't doubt that. But it's also going to put a lot of people out of work. And last I checked, an economy is people buying things. So what does that mean? Right? So it'll have pros, but it'll have cons, and nobody knows how that's going to shake out yet. But we're partying as if this thing has just saved our bacon.
That's right. That's right. And if you take out the AI euphoria, and you take away this bizarre Fed pivot, higher for longer to, we're going to be cutting, and then they don't. It seems like all they need, those two combinations were just enough to light the fuse of excess euphoria again and bring that greed back into the market that as of now is carrying tremendous momentum. But the longer this goes on, the more damage it's going to do on the other side. Because you look at the statistics with investors, 3 years is about the period of time that they tend to be patient. That's, in our society of instant gratification, that is an eternity, right? So it's one thing if you've got somebody in there who understands and you're playing the game by the rules that are forced upon you, and maybe you're not squeezing everything out of the market, but you're getting some participation. But how many investors are out there that have been burned from somebody in the past? They're doing it not because they enjoy doing it and they wake up looking forward to doing the research. They're doing it because they don't trust somebody, or they haven't found somebody that they can communicate with. And they're doing it because they have to, not because they like to. So you get this information, you're wise enough to look out and say, hey, I can think critically, right? This can't go on forever. History doesn't repeat itself, but it does rhyme. And then all of a sudden they make that one mistake, that last little temptation, and they pile all in. Okay, I'm going to be a long-term investor. That's when markets like this turn, and that's what makes it so hard at the tops and the bottoms, right? Once you've got that bottom established, you've got an indication it's there, but you're never going to be able to pick the exact bottom. But at least valuations give you an indication that that's when you need to buy, right? So we don't want to be chasing gold, for example, when you get in your car, or you're at a cocktail party, or you're taking an Uber ride. All they're talking about is how much money they're making on gold. When that event happens, if you've been in ahead of time, that's when you're looking to be reducing your positions and going out, right? So this is just a dangerous environment, and it breaks my heart from a long-term perspective, because I don't know when this ends, but there's a lot of people that are going to be harmed by this. And it's, our leaders have if not all the responsibility, large responsibility in this. I know we have responsibility as individuals to pay attention to the details and have the courage to embrace the truth. But when you're manipulating the numbers for your own political benefit in the short run, because you don't like the guy on the other side, or you hate the guy on the other side, or you're afraid of the guy on the other side, that's not what made America great. That's not what makes great societies. The truth is always the most important thing. And when you're obfuscating the truth, or you're outright lying, then there are individuals out there that throw in the towel and get hit in the mouth with a baseball bat on the other side of it when the market reverts to reality.
Well, this is an important time. Like everybody's got to just be aware of what the landscape is. You've been notified, right? And so let me just say that, on June 15th, we're going to do this great taking webinar, right? And again, might have it right, might have it wrong. There's a lot of details. We've done a lot of study. We're doing our best. We think it's a real thing. Don't have all the answers yet, but you at least have to be notified about it. So if anybody wants to come to that, we've got a bunch of experts. We're going to have David Rogers-Webb there. Paul's going to be there. Suzanne Trimbath. We're going to have people talking about everything from offshore gold storage to IRAs, things like that, in the spirit of helping, because the more I've looked into it, I realize, Paul, that this is just one of these things where my ignorance is not sufficient anymore, right? The only people who can be ignorant of the law are cops and congressmen, right? Mm-hmm. And I think they've said that. It's I think the Supreme Court, remember, they said it's okay if a cop arrests you just because he's ignorant of the law. What are you gonna do, right? It's like, well, is that their job? But I can't be ignorant of these things, and you can't, because then they'll say, oh, well, that was the law. You didn't know about that? Well, you should have, right? And of course, it's way too much for any one person to keep track of anymore. I can't even keep track of the terms and services and conditions under the last app I downloaded, let alone all my insurance policies, let alone the tax code changes this year, etc. Right? It's just like, how do you do that? So we got to talk about it. And you know what? I just want people to be notified at this webinar so that they get it, they understand it. And then they can say, you know what, Chris, I think you're nuts. I'm not worried about it. That's fine. But we can't be ignorant about what's going on anymore, right? These raccoons have been busy passing laws that favor them. Who knew, right? And it's just how it is. Yeah. It's just another cycle of people being people.
Well, and I'll follow up on what you were stating there. Of course, I've not talked to David Rogers-Webb or Ms. Trimbath, but I've spoken to a couple of people that are participating in there. And one thing that's common with everybody that's there is they're working hard to make sure that they're doing something to inform people and giving them options, the options that they can discover at this point to protect themselves. And and Chris, I think we've talked about this before. You don't have to preserve absolutely everything if the event happens, right? But if you have preserved something, right? Like if you can't get insurance in Florida and a hurricane comes through and you're the only person with insurance that'll cover it, then you've got a house and you're a lot financially better off than every other citizen that's out there. So, there's options on where people can go to the comfort level that they have or the resources that they can set aside, but it doesn't take a massive amount of resources to put yourself in the top 10% of society if something like the Great Taking takes place. Because here's the thing, I've talked to a lot of individuals, and there are people that are like, they want to, cover their eyes and stick their fingers in their ears and go, that'll never happen. Well, I can confidently say, I hope it never happens, but I certainly, and I don't believe you can either. There's too much information there that says that, yeah, it certainly can. We just hope that it never does. But again, hope's not an investment strategy. So you have to prepare for that and then continue to walk forward in faith, knowing that you've done everything that you could prudently do to set yourself and your family up and still be able to live life if it's not something that happens in the next 20 or 25 years.
Well, yeah, and look, people have been telling me my whole life, Paul, that I'm going to die, but it hasn't happened yet. So I think they're wrong, right? We haven't had a great financial crisis since '08, and it's never going to happen again, and not in our lifetimes, according to Janet Yellen, who I turn to for all things expert related because she's such a star. I'm saying that very sarcastically, obviously, facetiously. So, but here's the thing. The Congressional Budget Office tells us that we have structural deficits at the federal level now that are going to be $2 trillion, give or take, a year for the next 10 years. So by 2034, we're going to end up with $53 trillion or $54 trillion of debt. That's at the federal level. Just this past week, big notation. Total credit market debt, according to the Federal Reserve, crossed the magic $100 trillion mark. So that includes federal debt, but also all corporate debt and household debt, right? 100 trillion. And it just is growing like crazy. And so we know that there has to be a balancing function between debt and income at some point. That's our GDP. That's what we're earning. And everybody's pretending like this is just going to carry on as is. The chance of that breaking is 100% if you give me a long enough time frame. Now, that's the tricky part. I don't know when the time frame is, but I'm pretty sure it's between here and 2034. I'm pretty sure that it could happen 10 minutes from now. We don't know. So the only prudent thing you can do is to understand that it's going to break at some point and say, okay, how do I want to be positioned? And so often, I was just on called Chi Girl, Tracy on Twitter Spaces today. It's like, oh, that all sounds pretty gloomy. What do we do about that? And I said, well, look, I think that what happened was with all this fiat money and printing and all this, people get a little crazy. They do silly things. They invest in and throw it all into technology, whatever. I think, Paul, in my lifetime, we're going to see fundamentals return. And I like fundamentals. I like things like the fact that we're not opening copper mines, and we're going to have a huge shortage of that, according to every analyst, Goldman Sachs, JP Morgan, everybody's saying it. It's like the simplest thing. We don't have enough. That's going to break on you at some point, right? Same story with oil. So I like commodities is what I'm saying. Silver. I can make a fundamental story around all of these because people just forgot, and they got all excited by the shiny things, and they forgot about the real stuff. And so I think reality is lurking in this story. And so you can position to have yourself weighted over on the side of reality. And like you said, when that great remembering happens and people wake up and go, oh yeah, I don't want that stuff. I want this stuff. You can be on the right side of that line, and they will, when the books are written, they'll go, oh, that was the wealth destruction. Remember that? That was the Great Depression, Weimar Germany. It was a wealth destruction. No, the wealth was still there. The factories were still there. The houses were still there. The bridges were still there. That's the wealth. And so that's the thing, is remembering that real wealth isn't the fantasy digits. It's the real stuff. and your ownership thereof. And that's the part I want to make sure people can retain that ownership position through this great taking, because those raccoons are going to try and make sure they end up with it. I think there's things we can do to make sure that doesn't happen.
Agreed. Agreed. And so I'm looking forward to the event, and I think it's going to help a lot of people make wise decisions.
Well, hope so. Hope so. What was this other? I had this other piece. So this is cropping up now too. So this is financial surprise index, the U.S. economic surprise index. It just turned negative for the first time. Well, it was negative about a year ago for a brief bit there, but then it skyrocketed higher. So this is just certain things, how are earnings coming in, what's happening with labor stuff. It's a collection of things, but just want to say that this actually conforms, Paul, more with what I'm hearing from people than what I'm hearing from the government statisticians about how good things are or are not. So
yes, I agree. I'm seeing the same things, conversations around. I mean, don't get me wrong. There are certain sectors of the economy, high-end housing is still selling very quickly,
mm-hmm.
but people are hurting. And when you've got individuals who've been able to save a substantial amount of assets, and they've had events that have hit their life that normally could weather them just fine, along with the inflationary pressures, and they're starting to get really, really nervous. People make dangerous decisions when they get nervous,
mm-hmm.
right? That's when they'll speculate. They'll be like, "Hey, I've got to make more," so I go into the market. So this is the type of environment that has the perfect backdrop with the perfect temptations to do the most amount of damage to the most amount of people. And that's the hardest part from our standpoint, is just keep people focused on okay, where do you need to be? How much risk do you need to carry? Okay, that's why I do the planning aspect, is say, okay, how much risk do you actually need to carry to be successful? Are you willing to carry the amount of risk that you are there? And then come back to the point of, okay, if you're tempted to carry that much risk, what if it blows up like it did here, here, and here? And what would that do to your financial situation? Are you okay with that? Because I'm a big believer that if failure is too costly to bear, the strategy is not worth it. And I don't know where I got this analogy, because I didn't. This scenario I heard someone else put together years ago. So I can't recall to give them credit. But the analogy was presented about failure being too costly to bear. So Chris, let's say you gave me $1 million every time I played Russian roulette. So if I pulled that, spun that revolver, closed it, stuck the gun in my head, and pulled the trigger, and nothing happened, and 36 times in a row, could you imagine what would happen in today's society? They'd be interviewing me on CNBC, because I'd be saying, "Hey, I've figured out how to spin that revolver just right," But failure, the moment that bullet's in the chamber, what good does the money do you? You're not going to have a chance to spend it. That's an extreme example of failure being too costly to bear. Too many investors, because our industry is not designed to show that, right? It's not designed to show failure based on risk levels. It's like, hey, fill out this form and tell me you're an aggressive investor. Hey, I've got this great solution to solve your problems. And so it's happened slowly, and people don't, even the industry doesn't realize it's there, but it's trying to offer a product that draws in the most amount of investors to sell the most products, because financial services are product selling, right? I mean, it is, that's what the industry does, so that they can generate revenue and be the number one firm that's out there. Where the reality is what our job as advisors is to advise people and point them in the right direction, explain the risks, and then help them to navigate what's appropriate in their situation. So I believe that minor difference in this environment right here can lead to outsized results in the individual's life. I'm not talking about beating the market, right? There's, if you've got a good strategy over time, you will, or you do everything that you need to, but what's an arbitrary index, if you know exactly what you need to do to be successful, and what it is that can keep you from being successful if failure occurs. That's the most important thing. And then you're not in a situation where you're trying to keep up with the Joneses and having that temptation to be sucked into the market at the top. And for it, with the risk of talking too long, it leads me into one more thing that I was thinking about. Warren Buffett, he's a legend. There's times where people make fun of him, and granted, Buffett started in 1972, 73, and he had the wind at his sails going forward. But regardless of that, it doesn't matter what environment that Buffett's been through, he would have been a legend because of the fact that he's disciplined, he has a process, and he has the courage to follow it, and he's patient, and he has the willingness to walk the path less traveled. So Berkshire's war chest is now at $189 billion at the end of the first quarter.
A lot of money.
And yeah, it's a lot of money, $189 billion. Of course, our government, sends that to other places, at the snap of a finger.
Mm-hmm.
And Warren Buffett told the shareholders over the most recent weekend, this or last weekend, that he expects the pile to reach $200 billion soon. Because, quote, we would love to spend it, but we won't spend it unless we think we're doing something that has very little risk and can make us a lot of money. So the thing I like about Buffett is as I've studied him over the years, you go back to 1999 when the very flamboyant individual on CNBC was calling for his resignation because Buffett was too old and too detached to understand what was really taking place in the technology stocks. Buffett wasn't buying them. And in 1999, he was down somewhere around 19% when the S&P 500 was up 20. And he made the comment, I just don't buy things that I don't understand. You can't tell me Buffett didn't understand their business models, but that's a much more because most people didn't understand why those stocks were trading at that valuation, right? And a lot of investors at that time really didn't understand the long-term impact of some of those technology stocks, but few could. Most people were just chasing it. So he's down 19 to 20. Market's up, 20% during that period of time. And he's willing to be patient to walk away. But what he was doing, because of his strategy and his long-term thought process and his discipline, was buying the things that people were selling to go chase those technology stocks. Supply and demand. The market got lopsided. You showed that chart just a minute ago that technology, because of AI and semiconductor chips and the returns that have been there, that's where all the money flow is going, and ignoring everything else. Well, when the market cratered from 2000 to 2002, I think the S&P was down 47%, somewhere around there off the top of my mind. I think the NASDAQ was down closer to 80%. People don't believe that can happen again. But it was the same type of environment then that we're in right now. And Warren Buffett was taking the path less traveled. That's what investors have to do from a long-term standpoint, is be wise. If you have to participate, only participate in the manner that you need to, and be patient enough to wait this out. And if you've got the tools that can help you stay patient and help you when that risk is past, it makes that journey a little bit easier. But even then, this is the type of environment where the market could drop 10% on one day and then go down another 10% quickly before anybody even realizes something's turned. It is a dangerous environment. We've got all kinds of warning signals out there, and it's a time to be careful, in spite of the fact that I think that the market's going to more than likely run to all-time highs between now and July. So,
Well, here's my bull case. You ready for my bull case?
Yeah.
The Federal Reserve. Like, we've all been conditioned and trained to know that if the market starts to wobble a little, the Federal Reserve will be there. It's going to pick it up. They'll jawbone and say comforting things. There'll be dovish statements that if they have to, they'll run some more money into the markets. They'll ease financial conditions. Because that's the bull case right now. Now, what nobody's articulated on the back end of that is like, well, where does that go if that's just leading us to have more companies that are in kind of weak positions and have more debt and more this, more that. So it's not really it's not a solid case, but I get it. We've all been conditioned. The Federal Reserve has been bailing this market out my entire adult lifetime, and so why wouldn't it continue to do that? They will. The question is, what if they screw it up, right? And that's why I think the great taking is sitting there. It's like, that's the safety valve. I think they don't pull that trigger unless they have to, but if they have to, that trigger's installed. And here's the thing about guns: you don't install a trigger unless somebody's you intend somebody to use that. So
I was going to say, that's right. That's one thing that I was taught in the training classes that I've been through is it is not something that you pull to flash a warning sign to say, stay away from me. You do not pull it. And, you do not unholster that gun unless you are threatened and you really think that you're going to have to use it. And you hope to God that you don't have to use it when you pull it.
exactly.
But so
Yeah.
you're right. Well, and that makes sense, Chris, because if we're at a point now, just kind of going down that conversation since we're here, and I've been thinking about it, it's like, okay, how could they use it to eliminate the inflation in the system, all this excess money? If you want an equalization of society and you pull a trigger like that, and then you fall back to just the SIPC limits or just the FDIC limits, well, that's a great equalization of a lot of the nation, especially for those that aren't prepared, right? So, and then worst case scenarios, they just hit the trigger across the board and none of that stays there. But
Well, I mean, the SIPC is there to protect you in case of missing assets. So if the
mhm.
great equalization would simply mean those assets that got taken from these people, where did they go? They went over here. They
Yeah.
went somewhere, right? So we know that that could be part of it, but there's just there's a ticking clock here, right? Which is that it's not
hmm
possible to continually have these imbalances exist, right? Plutarch said the oldest and most fatal ailment of all republics is a gap between the rich and the poor. So we have that rich gap creating its own sets of stresses right now. We've got a federal government whose budget is wildly out of control at this point in time. And we've got inflation that I actually think the Fed can't do anything here. I think that if they cut rates, we get
hmm
inflation, and if they keep rates high, we have inflation. I don't know that there's a happy place to go here on this whole thing. But that's really a sign, Paul, that underneath all of this, our economy is really not chugging along like it's supposed to. It's really on life support, and it's from all this fake stuff, too much money and credit and debt and government deficit spending and all that stuff, because we never really had that clearing that we were supposed to have. And I'm a big believer in capitalism, but I mean, I'm talking Joseph Schumpeter creative destruction. Every so often, you need the
Yeah.
forest fire, you burn it out. I would have let GM go under. Maybe this is an unpopular opinion, not everybody will agree. But, the government bailed out GM and they're like, oh, we made money on it. I don't care. GM was run in a bad way. It became a big, stupid company. And if it went out of business, lots of small, scrappy, innovative car companies would have stepped into that void, and who knows what kind of cars we would have now, right? So,
hmm
same thing. Like, oh no, what if Citibank had gone bankrupt during the Great Crisis? I'm like, super, you know, we
Yeah.
don't have a Citibank, and all these other companies would have come up in banks and services in that wake, and we would have had that. So I think we actually, I disagree with interventionist monetary and interventionist fiscal policy, which is just designed to prevent the big companies from going out of business. Because those same people, Paul, they didn't care when they
hmm
shut down mom and pop during COVID, right? Remember,
Oh, no.
Target could stay
No.
open, but your little store had to
Yep.
close. Your cafe had to close, but McDonald's could stay open. They picked and choose, but surprise, the little companies got screwed and the big companies were rewarded in that whole process. I totally disagree with this on every possible level as the way to go.
I do too. And and we've missed innovation, as you've stated. We've missed better service because Charlie Munger, Warren Buffett's partner, I believe it was him that made the quote, "Show me the incentive and I'll show you the outcome."
My favorite quote.
So when you tell, okay, these companies are too big to fail. Well, guess what? If I'm a medium-sized company, Chris, I've got to become too big to fail in a hurry
Hmm.
because now I can get away with things. And Grantham pointed out the fact that we're in a period of time now where and I remember talking about the monopolies when I was in college. I remember studying monopolies when I was in high school. And my kids don't even know what a monopoly is. They do because I've educated them, but I'm like, hey guys, do y'all study monopolies in college, any of your college education or high school? No, it's just not studied. And he's talking about the fact of how many monopolies we have out there. And, and he also made comment. He was like, yeah, these companies will grow and they'll become gigantic. But even like GE in the late 1990s, they reached the end of financialization. And that's a good chart where you talk about financialization. What was his name that was running the company at the time? So many
Jack
people have
Welch.
studied him. Jack
Yeah.
Welch, that's right. So, Welch was just a legend. And he was because of what happened in the stock price. But now you go back and take a look at it. Let me see if I can pull that up here to see. There's a lot of investors. That was the number one performing stock in the Dow Jones or maybe the S&P 500, if I remember correctly. Let me stretch this out for 50 years. And, now it's broken down. You can't just find GE because you've got GE Aerospace and some of the others. So I'll have to do a little bit of research. It's not as easy to pull up as what I was looking. But that stock peaked and then went down for quite some time and caught a lot of individuals off guard. So these monopolies and government protection, that is not free markets, and we're missing innovation, right? Because if you're in that monopolistic position, you want to buy up any competition and just squash it because it costs money to reinvent yourself. Which means we get so yeah, our entire society is missing out on things that could make our quality of life easier because of these really politicians that are willing to serve money instead of serve the people.
Well, isn't that just sort of the sweep of history, though, that this is just kind of how it happens over time? And I've been just aghast over the past few weeks watching Congress just trample over the Fourth Amendment with their FISA 702 warrantless stuff. I've been watching them, make, anti-free speech rules about what you can and can't say, and then just throwing money hither and yon for whatever the cause du jour is and all of this stuff. And none of this stuff, Paul, in my estimation, is here's what made America so great. And it's really almost gone at this point in time. They started it out right at the beginning. Life, liberty, pursuit of happiness, right? That's encoded in there because these were smart people who said, we know that if people they're alive and they support life and they have liberty and they can pursue happiness, which can mean anything, right? Alex Honnold wants to free solo the nose. That's his happiness. I want to raise cows. Everybody does their own thing and somehow it pulls together. And you do that. And that's actually where our prosperity comes from. But then somebody comes along and says, oh, but it would be really awkward if somebody said something that somebody else took offense to. So let's put some limits around that. It makes sense to them, but they don't understand what they're doing, right? There's midwits. They don't understand that free speech is not just this nice to have temporary thing that only applies if nobody's offended. It's actually vitally important as private property rights. Not privileges, right? Privileges are things that can be constrained and nibbled away at, and they're conditional. Private property rights, but we don't have private property rights anymore. Those are gone.
Yes.
You rent your house from your local government, full stop, right?
Yes.
I don't care if you think you own it. You do not.
Yeah. Georgia's a low tax state, but I had a client come in the other day and we planned well for it, but they made the comment that says, it's amazing. I've had my house paid for 20 years. I've been in retirement. Here I am in my late 70s and I have to pay the government $500 a month just to keep my house. Mm-hmm. And there are other states I know that it's thousands of dollars a month just to keep their home, or $1,200 a month just to keep the median home.
Yep.
So yeah, you're right. That's a burden that's pushed upon the people to where it keeps you on that treadmill one way or another, at least, trying to stay on that treadmill to just maintain what you have because they're always in your pockets.
I know. And I think that's what's going to have to break here at some point. So just because it's become untenable, and I feel terrible, as we've mentioned before on this show, about the impact this has on the younger generations. And I can't even tell you what kind of an angry SOB I would be if I was 18 today, because I'm a Virgo. I like things that are fair. And what we're talking, this is deeply unfair. The government's busy printing up money and handing it out to its friends who get stupid rich. And then they feel all insulated from everything, and they don't really care, and they have this, you have to listen to Paul Krugman come out and explain how inflation isn't that bad. The guy hasn't probably been in a grocery store in 20 years,
Oh, No, there's, and that's the problem. They're so detached from reality, and they're so surrounded by I'm pulling up something that I thought was quite interesting that kind of brought me here, but they're so detached from reality that they don't even understand what even the middle class is facing in our society today, because they're nowhere near the middle class, right? They're certainly in the top 1%. And maybe their bank accounts aren't there, but they're running around with everybody in the top 1% and being taken care of in ways that most of us would feel very uncomfortable, because we would understand that somebody taking care of us in that way certainly is trying to get our obligation or favors at some point in the future.
Yeah. Yeah. So let me just, so at the risk of appearing old and sexist, which is totally a possibility on both counts, this, the Maine governor, right? Just Mills just signed an executive order to make the construction industry more inclusive for women. And so they're going to incentivize, because they're just going to give government grants that are distributed to companies that incentivize hiring female construction workers. So they're going to solve what they feel like is an injustice by, providing incentives and all of this and that. And I said, it's either that, it's a sexist industry, or, now hear me out, that men are actually stronger than women. And there was an interesting conversation that developed into this, because I worked as a framer for a couple of years, and I was a pipe layer. We were doing the big underground pipes that, when you have to get a conduit of steam from building A to building B, there's somebody has to put that pipe in the ground. I will tell you that it wasn't sexist, but when you had to hand up 18-foot rafters out of 2x10s up a floor, took something. When you had to carry the sheetrock, and by the way, you were a wuss if you took the tape off, you had to carry two pieces at once, right? And carry that sheetrock up a few flights of stairs. This is not, it's not a question of like we have the wrong frame of mind here, but that's who we have legislating us now. They're like, oh, it must just be that somehow women are disadvantaged in this business. I'm like, then you've never worked in the business.
No. Well, obviously they haven't. They've not grown up. And it's interesting, because I just learned something about you from that background of all the other things we've learned as we've known each other. But I grew up my family owned a lumber supply. So when I was in high school on the weekends, it was the worst thing on Saturday morning, because on Friday night football, I had to be at the lumber supply at 7 a.m. on the morning, next morning, battered and bruised, hauling sheetrock in. And the 12 footers, there was this one crew that just loved to make me carry 12 footers. And of course I get out there, on a Saturday morning and rip the bands off. And to this day, I've never heard the end of it. Like, they'll tease me to this day that, oh, hey, when he was a kid, he wouldn't carry sheetrock, two at a time at 12 foot. And
you band ripper.
Yeah. And I was strong and young at that time, and and God just didn't make women to be able to operate in that manner with that level of strength. They had unbelievable amounts of strengths, but a lot differences than we do. I wish they'd gone Jordan Peterson's We Who Wrestle with God tour in Nashville, Tennessee, and listened to his talk on Genesis 1, and it just, the wisdom, and obliterate that. But that's mind-boggling to me.
I can't wait. I'm going to see him in June. He's going to be in Wallingford, Connecticut, so we got tickets for that.
That's exciting. I can't wait to talk to you after you've been there.
We're going to see that, but it's just fascinating, yeah, because, and by the way, the reason I got out of the construction business, even though I kind of liked it, was that I was observant enough to notice that there weren't a whole lot of old dudes in the business. Your body gets wore out by about 40, right? You saw people getting close to 40 and they couldn't get up off the ground without groaning, and their knees were out or their backs had been tweaked. It is body damaging work, right? And so now we're going to pass an executive order to make sure that more women it's like, maybe somebody should ask if is that the job they want? Or are we talking like some weird subspecialty? Like, oh no, we're not talking about the sheetrock. That's not the ones we want. These are going to be people who are just driving the Bobcats, fine. Okay. It takes less, but still sometimes you gotta get out of the Bobcat and get that pallet cleared out, or, something stuck in your implement or whatever. And every so often you just got to get out there and do some real hard physical labor. That's construction.
That's right.
So, Yeah.
Well, Chris, the thing that concerns me the most about legislating in that direction and providing all these incentives, there are some women who are gifted and have the education where they have all kinds of opportunities and they don't have to end up there, right? But when you're incentivizing this and you're throwing those funds and the economy is really struggling, there are some people who may not necessarily want to be there, but they go there because the incentives will draw them in relation to something else. And then all of that excess wear and tear on the body when you're expected to keep up because you don't recognize the differences in between the strengths of men and women. It's just not a good situation. It's just, there's a way that's, like Proverbs said, there's a way that seems right for a man, but in the end it leads to death, right? And that, that statement is, there's a way that seems right, but the end result is not what we're expecting or hoping that it will be.
Yeah, so again, I'm a free marketeer. I figure that people end up where they want to be, and that sorts its own self out. We don't need executive orders trying to make more people do this and less people do that. People will sort it out, right? And you probably end up with, on balance, the best system you can get because people self-select towards stuff. I didn't self-select towards rodeo clown. Just didn't draw me. Probably wouldn't have been all that good at it because I'm not that good with giant raging animals around me. Like I'm out with my cows and they flick their ear wrong and I back up, and so but if they legislated something that I had to be a rodeo clown or push me that direction or give big incentives for New England dudes to become rodeo clowns, maybe I'd have ended up there, but we don't need that. We self-select,
Right. And back to the free speech thing, what bothers me so much about that is my oldest son and I were having a conversation not too long ago, just talking about, don't create enemies, treat everybody with kindness. If you're wrong, you apologize, but we're all going to have enemies in society. There's people that just aren't going to like us for whatever reason. Maybe it's just a personality. Maybe you remind them of their uncle who, beat the fool out of them when they were a kid and they always hated them. But, there are times in our lives, if we really pay attention to it, and Jordan Peterson was highlighting that here recently, your enemies can be, your greatest teachers because they highlight your weaknesses, right? And our friends, the people that care about us the most, they're willing to hurt our feelings because they care enough about us to make sure that we're going in the right direction, that we don't go down the wrong path. So, when somebody says something that hurts your feelings, maybe they hit home a little bit and you need to pay attention to it. Why did that hurt my feelings and what can I do? Or, one, you develop the thought process to ignore them and move on, or maybe they hit a nerve and an insecurity that you have so that you can better yourself and change your behavior and press on to the greater achievements of the future. So, it's a shame that we want to, words can hurt. Yes, they can. The truth hurts more than anything else. And that's what concerns me. This isn't about controlling speech. It's about, controlling the truth so that those that are in power continue to lie and project upon the populace this false reality for their own narcissistic benefit.
As soon as you say, hey, Paul, you're responsible for how I react to stuff, you have lost the plot line, right? I'm responsible for how I react to stuff. If you hit a nerve, it's up to me to decide if I'm going to react or respond. Those are two separate things I can do. And if I choose to go down the path of response, that means I've managed to contain and control myself a little bit. And like you said, your worst enemy is sometimes your best teacher. Carlos Castaneda's books and all these, Sufi books that go way back, he said, your best teacher ever is a petty tyrant. That person who just gets under your skin because they show you that place that you haven't grown past yet, And that's an old wound. It's your shadow, all of that. Your best friends are the ones who will hold you accountable so that you can be a better version of yourself next time, right? Not to be perfect.
Yes.
Because we all screw up, but that's what these wokey lefties are they're trying to say, oh, you know what? We're going to enshrine perfectness. You never transgress against me. I never transgress against you. Like, what is this, junior high school, and we're going to encase everybody in like emotional lucite so they never develop as humans? I don't know if I agree with that.
The worst part is people who can't control their emotions are easy to control.
Yes, good point.
And I hate to say that, but when I was in high school, I've always had a gift of reading people. So, you all go, I'm not proud of this. I'm just using an example, but you know, there's times where I walk by and go, watch this. And they're like, what? I'm like, I can make one comment and this person is absolutely going to lose their, you know, emotions, and poof, you know, right. And then boom, it creates all this chaos. Well, that's not a good skill to have. Right. But the point being is people who can't control their emotions are really easy to control. And because you can maneuver them with their emotions in the position that you want them to be in without them even understanding that that's taking place. And that's what's so concerning about, you know, all of this emotion in society today.
I agree.
You can dangle greed in front of them and sell them a stock that they shouldn't buy in any other environment. You can dangle fear in front of them. You know, you can really maneuver people that don't have the ability to control their emotions.
And that is the point. That's, I think, a big part of this, right? Yeah.
Yeah.
All right. Well,
I didn't think about that.
It's a good point. I'm gonna reflect on that a bit. But hey, thanks so much for your time today. For anybody listening, this is Paul Kiker of Kiker Wealth Management. If you want to talk to Paul and his team about a good risk managed strategy for your portfolio, come to peakfinancialinvesting.com, fill out a simple form, and somebody will get back to you as soon as they can. So within 24 to 48 hours, isn't that right?
Yes. Yeah, they'll be contacted. If it comes in on a Saturday morning, it might be Monday morning, but we will be in touch first thing.
Yeah, exactly. So again, love talking to you, and I love all the wonderful reviews we're getting back from people who've said that finally it's great to be with somebody who actually listens to them and responds and shares the way they see the world. So that's I think a really valuable thing in this day and age. So good stuff you're doing there.
Thank you. Thank you. It's our honor. And gosh, I've enjoyed meeting the people that I've met. You've got a great tribe out there, Chris. Great followers, and it's been enjoyable to meet and hopefully make a positive impact in their lives for the better.
Absolutely. Well, with that, until next time, Paul.
Good to see you, Chris.